update for this Wednesday, and this is October 1st, 2020, 9:15 a.m. Central Time. Well, we have a stock market that was a lot higher if you tuned in maybe an hour ago, an hour and a half. It's been settling back. You'll see that the construction data was good, but we got some ISM data that wasn't so good. Metals are higher as the dollar was lower, but the dollar has recouped quite a bit of that loss today. So we're getting this sort of all over the board type move. When you take a look at what's going on with the energies down sharply, but there is a market I'm concerned about, and it's copper. Copper is down suddenly 11 cents. That is a monster break for copper, so something bad is going on somewhere. It's obviously impacting what the market thinks going forward. That is Dr. Copper for a reason. I always watch that. Bonds and notes a bit higher. Now, let's talk about what's going on. Part of what is going on is the negotiations between Treasury Secretary Mnuchin and House Speaker Pelosi. As I understand it, today's the drop dead date. Yesterday there was going to be a vote in the House. It was known it wouldn't pass the Senate, but then at the last minute, negotiations took a turn for the better. And it appears, I'm just giving you what it appears, that the White House is offering up to $1.6 trillion. From what I understand, the House wanted $2.4 trillion in the package. That seems like a pretty big gap. If they can get up to 1.9, might make a deal. The second part is instead of $300 a week, $400 a week to the end of the year. The $1,200 payment looks like it's in. There will be state and city aid for that. Won't be as big as the Democrats wanted. It almost, what was it, $1 trillion or so. I don't even remember the numbers. It was monstrous, but that won't be there. It'll probably be something closer to, I don't know, $500 billion, something in that area from what the White House is proposing. But this is what we're hearing. This is what the press wants us to hear. They're getting closer, but they're certainly not there, and that's going to weigh on the market as well. Then we look at the August construction spending. Folks, this is great. It's almost 2.5 times what the market was expecting. This is the problem number, the manufacturing. It came in lower as the composite. The market expected it up a fraction at 56.3 from the prior 56. Instead, it came in lower. But the number that I think everybody's looking at are the new orders. That is a terrible number, going from 67.6 to 60. It was good to see employment jump. Market Group's final September U.S. manufacturing sector PMI came in, and it's 53.2 versus the prelim of 53.5 and the expected of 53.5. Little softer there, too. Challenger U.S. planned job cuts, 118,804 positions, and that is from the prior month's 115, so a little bit larger there. The jobless claims came in lower at 36,000, lower to 837. The market was looking for around 850, but the problem there is it's still an 8. We're not breaking through that, and that is really problematic. And here's what the market's got to be looking at. What's going to happen to that number if they don't reach a deal between the Democrats and Republicans for COVID relief? That number's probably going higher. Continuing job claims down 980. That's a good number. Personal income down 2.7%, larger drop than expected at 2.5. Consumption up 1. They expected it at 9. Well, you can see the rest of the numbers here. They're a little bit better than the market thought. But as you can see, how's the market responding? It is higher. So let's not look a gift horse in the mouth. But everything's going to hang on what goes there. A problem for the marketplace, and this could be what's hitting the copper market and the energies, is that the COVID is mounting an attack. It's really grabbing in Europe, much worse than we thought it was, and it keeps picking up the momentum there. How far are we behind on that? That could be what's weighing on that market right now, so you've got to keep your eyes on that. Yesterday in the grain markets, the ending stocks numbers were absolutely a wild surprise. So the market roared. That's the only term you can use. And you're up here into the 1035 area in the bean market, 385 in the D's corn. These are high numbers. So what the market has done is it left the trading range, jumped to a new set of numbers. Now it might do some backing and filling, but I think that the market has said anything that goes wrong in the U.S. harvest, the market's going to be all over looking at it because supplies are super tight out of nowhere. That is a big change in the market. You know, I talk technical indicators at the end of the day, and as a brush up, you might want to look at our Guide to Technical Indicators from our good friends at Modern Trader. And we talk the chart patterns, how to draw chart lines to different ones. You know, I'm a real fan of moving averages, the different types, market sentiment that goes with it. I had a talk yesterday when you talk moving averages with one of our clients, and he was looking at stochastics, simple versus exponential moving averages. Interesting how what George Lane had told our staff to use, which is not quite the way that a lot of people do it. But our people had talked to him when we had done this, and obviously George is gone now, but he was on my TV shows. I used to have a TV show, Stocks, Options, and Futures, that ran across America on the station that was bought out to create CNBC. And all these analysts, we'd have a chance to talk to them. My techs would talk to them, and we were just getting into the computers in a large way. A lot of fun. But then we created all these guides to indicators with our other friends, and this is something you should look at. This is as good as the day it was published. I think it's better, actually. 23 pages, each one of them approximately. You print them out if you want to keep them. What a guide. Go to our website. They're free. Just hit what you want. We send it out to you as a PDF, and away you go. I'm Ira Epstein. I'll see you at the end of the day. You have a great trading day. See you this afternoon.